Hi and welcome to the Market Alert for Friday, the 3rd of December 2021. Big day today, but before we get into that, market turmoil as easing Omicron anxiety battles surge in technical default, which basically means the T-bills market's message, buckle up, it's coming. So yeah, the market is expecting quite a lot through the next few weeks and months. And this doesn't help either. Our 29 trillion deficit, interest rates, inflation and debt. Today we stand at the abyss, yet no one sees or feels threatened by a financial cliff. No, not until it happens, and then it's too late, of course. That's the whole point. Keep everybody in a state of illusion. Meanwhile, the implied volatility, we've not looked at this for a few days. We had a high this week of 23.78, 22.55, 20.98. As the market has started to settle a bit. But we did nearly get to the 100% increase on the implied volatility, which means that the underlying market fell out a bit. You can see the correction here where we've got the spike there. Normally 100% increase from the low to the high of the move is an indication that the market has found support and then will resume, which has been the case all the way through. I've used this since 1994. Today's a big day for news. We've got the criminal out at 8:30, Lagarde speaking. Then we've got MPC member Saunders speaking for the UK, and then 1:30 is the biggie. We go for the non-farm payroll change. So anything greater than 553,000 will be a bonus. That will send the metals markets to the upside. If not, they will be slammed aggressively to the downside. They won't move up much, but if the number comes out less, then it's really going to get hammered. So be warned on the metals markets. ISM at 3 p.m. is going to be a non-entity after the non-farm payrolls. And then we've got a Treasury currency report out at some point today as well. So let's start off with the Dow. You can see that we're still finding support at the 89% retracement. The market moving down yesterday, but then recovering before the close. You can see the buying there as the market now starts to attempt to move to the upside. We've got some divergence as well, as we spoke about yesterday. The market, all the stochastics coming back in the oscillator as the market made a new low on Wednesday. So a bit of support there at the moment. So to draw in the fibs to the upside, all we have to do is just look for the first upside red line, and then we can just draw in from there down to there. And these will give you the main three of the fib retracement. So you could put in 38 and 50 as well, which I haven't got selected, but let me just have a quick look at that. It'd be worth actually noting where these turn up. So let me just grab that and remove that. Normally I don't use these because the moves aren't this big. When you get a big move, it's worth adding in those smaller numbers, which you can see there. We're just at the 38% retracement at the moment, and 50% retracement coming in at the high of this bar here that we had on Wednesday, where we had the market selling off overnight. So again, important areas that are worth just taking the time to actually add in there. So that's your upside targets. The downside, of course, is taking out that 89%, and then the automatic low that has been drawn in there from Wednesday as well. In the 30-minute chart for the Dow, yesterday you can see from the off, the market was straight up. There was no holding it back, you can see there. And then we had a bit of selling coming into the market. Market traded sideways for the next 30 minutes, but it was still long. We got the 5 bar closing above the 20, going through the 50, and then just holding until we got to here. So it was all the way to the upside yesterday. You can see the volume supporting this as well. Also coming off an oversold situation, then we became overbought, and then we had divergence in the market up to here. 200 MA, the market stops. We've got a divergence there. Where you can see the stochastics are lower. This is going to be automatic in the software, as from today the beta version is going to be with me. And then we've got the market from here down to here, and you'll see the market stopping at the 76.89% retracement there, and then the market makes its way to the downside as everything switches with the parabolic, the averages, and the MDI all the way down until we get to the DP overnight, which we can see there, and then the market starting to move back to the upside. You can see them buying in here as well, and also the market is oversold. So nice and easy to pick the trades with the new indicators in the software. In the German DAX, again, we can see straight off that we're oversold. We've got a lot of volume down at this level. We're also at 89%. We've got the low left behind from Monday, and we've got the upside fibs there to actually get through. And interestingly enough, 38 comes in at the 200 MA, so 15,450 is the figure that I would look at, which just look at the blue line, unless you want to mark it up on the time frame that you trade. But 15,440 actually ties in with the 200 MA there. So a breakthrough there means we've got to get through this high, which is automatically highlighted. That is Wednesday's high, and then through there we've got 50.62, and in between that we've got the 50 EMA to get through as well. It'd be a big move to actually get through there in one go, but again, just be aware of these levels just in case we get some great stonking number that the market loves from the non-farm payroll, because they will move it just as they moved it to the downside on Monday there. In the 30-minute chart, we can see that, again, we were oversold overnight. So we've got not as great volume as we saw in the Dow. But, again, if we just go from this low over here, we've got two choices, the low here or here. We'll take this one and then up to the high that, well, actually, it's already been taken out. Oh, no, sorry, this is the one I want. And that will bring you back to 89. Sorry, I was getting slightly confused there. It's Friday morning, fatigue. So what we were looking for is the market retracing back to there, and it came back to 89, just above yesterday's low, which of course it would be, otherwise it would be a double bottom. So the market finding support, oversold, and then starts to close above the 5-bar green parabolic, market trading up to yesterday's high. So again, straightforward analysis. Once you start putting all of the tools together, which I am recording videos on at the moment, with examples, you'll see how easy it is to actually see where the market's trading. Start off with the customized and slightly tweaked stochastic that we've got added to the software, and you'll see where we're overbought and oversold, and then you just determine everything else by the other tools, i.e. pivots there where the market's got resistance. Plus we're also at a psychological level as well of 15,400, which of course ties in with what we're seeing in the daily chart as well there. Just that 15,440 is where you could expect some grief, which is just going to be above in the 30-minute chart. If I was to do this and then just drag that down, you will see, there you go, and that's where it's going to be. That's the 1550 or 550, and that's where the market will find resistance. That's where the 200 MA is. And again, once you do this, you know exactly where you are in the bigger picture, and it's a lot easier to actually determine where the market's likely to stop. We know it's going to stop at the previous day's high. If it drives through, we've then got that situation of looking inside of the daily chart at that resistance level. Once you know the background of a market, it's a lot easier to trade it. And then let's just have a quick look in the 2-minute charts overnight, see what the market's done here as well. And you'll see the smaller swings in this market. Let's just go to the start of the overnight, just a bit more. There you go, and you can see exactly the same pattern. The market was oversold here. The stochastics crossed, which is that diamond, and then inside of here you've got a retracement back, double top, and then in this bar here, this red bar closes. You've got the resistance of the BRN, you've got the 50-bar moving average, you've got the close below the 5-bar, and you've got the parabolic turning red, and the market trades down, and then you're oversold, and then you've got divergence as well because the market's gone lower, but the stochastics were already coming back as it was putting these lows in, changing parabolics, and then the market trading back up to the 50 bar moving average. And then again we've got divergence here as the market made new high and then came back, and then we've got divergence here as the market starts to go back with a double bottom. You know, I could do this all day long. Well, I do it all day long. It's just a matter of identifying the pattern that you're in. Again, you can see it all the way through here in this smaller time frame. You can do this in any time frame. So if you wanted to positionally trade or swing trade, whatever it is, you can actually do it. No divergence here, but we've got the market putting in some selling at the previous day's high, yesterday's high, and also the R1. And then we start to see the red bars coming in with red dots as the market starts to make its way down. 25 points down on this trade, or movement down on this trade at the moment. They tried to buy back in at the 20 bar moving average. That's why we've got some demand. Market has failed here at the moment. So the only thing that's left to add into the software is automatic fibs, which will be easy to do. He says, I'm not the programmer, but we've got a low and a high here, and it will just automatically put them in and then just delete them as the market comes through, as it does with these automatic price support areas as well. So as it comes through and then gives you immediately, you'll be able to see the area where the market's likely to find support. We've got 78 tying in there with a 50 MA. And like I say, it doesn't matter what the time frame is. This pattern is the repeatable pattern throughout every single market. Once identified and understood, simple 4-step approach, then you will see the trades open up in front of your eyes. And finally, again, apologies for getting sidetracked there, but it's just exciting to see how this actually works all the time. Again, in the silver market, you can see starting off with the market being oversold, you get demand. We close back above the 50 bar moving average. We get a rally in the silver price up to the 200 this is the 200 MA. Like I say, I must change the colors in this one. That should be black, so it's easier to identify. And then we get we're overbought. We've got a crossover in the stochastics. The bars start to turn red as we close back below the 5 bar, and then the parabolic joins it. And then we traded all the way down. Where have we traded to? Well, it's easy to draw in, isn't it? Because we've got a low here, we've got a low here, because that's automatically identified. These are the previous lows that the market picks up automatically. So I can go, if I go from here to here, I can see straight away it's gone through 89, but I'll just draw it in for you because it's a double bottom at this level. So we've gone through there. So all we have to do is just roll to the next low, which is automatically identified, and then draw this in, and it takes you to 78%. What a surprise. We've got a fib number there, and also we've got this low now, so we've got support there at 22.75.5. But of course it depends on the non-farm payrolls today. Do we go down and test 21.35, and if so, then we come back and we test this low across here. So yeah, again, you can see completely different market, same principles. It's the same all the way through. You can identify any chart in any time frame of what it's doing. I don't know if that's real or not, if that's a bad tick. That seems a very big spike to the upside. I don't think that's shown in the daily, is it? Well, it might be. Yes, it will be. It's this, obviously this high. I don't recall seeing that yesterday afternoon, but there you go. In the 5-minute, we've got, this is silver, we've got the market attempting to rally, but we became, as you can see here, oversold, and then the market starting to move. I just haven't got the parabolic on that. I'm going around to putting it on, but we can see there's a bit of demand there at the moment. Let's have a look at the dollar attempting to move to the upside. So again, what I would do here, automatically identified, is this is the first swing high. You've got the recent high and the low as well. So again, so if I want to work out where we're going, will be there's the first. And if it goes through 89% in those fibs, then I just mark these ones up and take that one. But you can also see that what we actually get, if I just drag this one across here, we actually get a confluence of fib numbers as well. So if I just drag that out and just bring that down, you can see there where you've got two lots of fibs on the more or less on the same price, you will find more resistance as well. So very useful tool. There you go, that's your first set of fibs there where you could find some resistance. Now again, coming back to fundamentals, if there is the non-farm payrolls are good, then the dollar will move lower. But if it comes out less than forecast, then you will see the dollar move to the upside. It's a bit of a paradox at the moment because, of course, if the numbers are good, you could actually see them move the same way, which we have seen of late, simply because obviously there's a threat of a rate increase coming next year. And if the non-farm payroll figures are greater than forecast, then you can expect that an increase in interest rates is a positive for the currency, is what I'm saying. So you could actually see them both move together as well. But we'll have to wait and see at 1:30. It's going to be an interesting one, that's for sure. And then finally gold. And again, you can see exactly the same as silver. We're way oversold on gold at the moment. We were overbought. We had the crossover again at the 200 MA, turned red, and the markets sailed to the downside. This is a daily chart. This is a really good move on a daily position trade. And again, you can see where the first support is, price support, and the second one. And if you wanted to mark up this, see where it's going to bounce from here. Well, you've got your high and your low. So we go from there to there and project back, and then you'll see exactly where your potential resistance levels are. The 89 is always easy to work out when you've got these lines because it's always just going to be below it on the upside and just above it on a move to the downside. So for example, if I wanted to find out the next downside target, I can see that's a double bottom. The market hasn't taken it out yet, but if I go from here to here, I can see 89 there. So that move back, I can see that 89 is just going to be above this double bottom. You can actually eyeball it. You don't need to draw these in, but obviously it's a lot easier if they're drawn in. And I'm, like I say, going to try and get these drawn in automatically because it can just reference these points and then draw them in, even if they're a very light shade in the background, but it just gives you an indication. And it's easier, obviously, if they're automatic. Okay, I think that will do it for this one. I've gone on far too long, but yeah, it'll be an interesting day. Let's see what happens at 1:30. So as ever, thanks for watching. Have a great weekend, and I will see you on Monday.